Ladies and gentlemen, welcome to the Stock Market Show. In this video, it's a different kind of video today. We're going to go over 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 stocks with growing yearly revenues. When I invest in a company, I like investing in companies whose revenues continue to climb because it reflects demand for their product or service. If you start a business and every year you're selling more and more, why wouldn't I invest? Your company continues to generate increasing total revenues. And of course, as a shareholder, I would expect a return. So I'm going to go over 10 stocks with growing revenues and why these are a buy. If we were to just look at the revenues, no charts today, just good old bottom line. Is it climbing year over year? And we'll see what kind of performance we get over the course of the next 5 years, 2025 to 2030. So let's start with APLD stock. Sitting at 12.33. Total revenue has been climbing since 2021. 8.55 million, 55 million in 2022, and 2023, 165 million. A massive increase from 55 million in 2022. 2023, 165 million. Let's go to the next stock. So APLD, we know they got a contract as well with CoreWeave, so there might be more to come, especially with the bigger companies. Maybe Microsoft, maybe Apple, maybe Nvidia, who knows? It's all speculation at this point, but if we're looking at the raw numbers, clearly there's the more demand for the product / service as the years go by. And that's reflected in that massive increase by 198% in terms of total revenue from 2022 to 2023. So APLD is a buy on just looking at the numbers. It's probably not a buy on the charts though. But just looking at the numbers, looking good. Serv Robotics, a robotic stock, AI stock. They're kind of like trying to replace DoorDash, if I recall, right? They want to replace the human that delivers, instead have a robot deliver things. That's what it comes down to. Their numbers, 2021, 0. 2022, 107K. 2023, 207K. So doubled. And then there was a massive jump in 2024 from 207K to 1.81 million. A 773% increase in total revenues. So imagine opening up a business and then there's so much demand and service, so much demand for your product / service that your revenues jump 700%. You would probably be very ecstatic to see that your business just generated 1.81 million, right? Because you're basically a billionaire. Just sell off at that point, just run with the money. I mean, obviously that would be silly. If there's so much demand for your product and service, you're going to continue to grow those revenues because you don't want to be just a 1 millionaire. You want to be a 10 millionaire, right? So looking good so far with Serv Robotics. You're going to notice a lot of these stocks are focused on AI, quantum, and robotics, just to be clear. So Serv Robotics looks good on the numbers. I don't think it's a buy right now. It's at a high right now at 12, so I don't know if it's a buy right now. But just looking at the numbers, clearly more demand for their product / service. We continue here. Nvidia, probably the safest stock out of all these because it has growing revenues since its existence. 2018, 11 billion. 2019, 10 billion. 2020, 16 billion. 2021, 26 billion. 2022, 26 billion again. 2023, 60 billion. There was a massive jump from 2022 to 2023, 26 billion to 60 billion. And in 2023 to 2024, it jumped from 60 billion to 130 billion. So its revenues have been doubling / tripling. And it's already a big established company. So who's to say big established companies can't continue to produce incredible revenue numbers? That's insane. 60 to 130 billion. Nvidia, one of the safest trades that you could make, one of the safest stocks you can invest in, quite frankly, with incredible returns every 5 to 10 years. Nvidia is number one on this list. Let's continue here to Kulr stock, one of the riskiest ones on here, but its revenues since 2020 have been growing. 623K in 2020, 2021, 2.4 million. 2022, 3.99 million. 2023, 9.83 million, huge increase from 3.99 to 9.83 in 2023, and then 10.74 million in 2024. Again, I think this is one of the riskier ones, but if we look at the bottom line only, its revenues have been growing. Although from 2023 to 2024, the revenues didn't increase that much. It only increased by 9%. But we saw Nvidia only increased its revenues by it didn't even increase. There was at one point in Nvidia 5 years ago where its revenues actually decreased for a whole year, right before COVID. But then we saw a huge surge recently because of the AI revolution. So this one's, keep an eye on this one. This one's probably, I think, sitting near a bottom, but one of the riskier ones out of all of them. I would put this at the bottom. It's got growing revenues, but last time when I checked the charts, it's not really doing much of anything. Palantir stock, I think it's one of the safer ones as well. Let's look at the bottom line here. It's incredible revenue growth since 2018. 600 million in 2018. 2019, 742 million. 2020, 1.09 billion. 2021, 1.54 billion. 2022, 1.91 billion. 2023, 2.23 billion. And 2024, 2.87 billion. Their revenues continue to jump 20 to 30% every year. So every year there's 20 to 30% more demand for their service/product. That's why you're seeing the kind of growth that it has, and why it surged to 135 from low of $5. Again, the bottom line looks good. I would say this is a buy for long-term hold, and one of the safer ones compared to at least Kulr. Hims and Hers. This one, again, we're just focused on stocks with incredible revenues. This one's not in tech. I think it's in healthcare. So it's probably one of the only ones on. Yeah, this is the only one that's not tech. I guess Mara stock is Bitcoin exposure, but isn't Bitcoin just technology anyways? It's digital, right? So I'm going to move Mara over. Just might as well get these two out of the way. Hims, healthcare. Rarely do I talk about healthcare stocks, but Hims in 2020, 148 million. 2021, 271 million. 2022, 526 million. Almost double of their previous yearly revenues. 2023, 872 million. And get this, 2024, 1.48 billion. That's right, 1.48 billion. A healthcare company, 1.48 billion in 2024. So again, growing revenues. What is there to dislike? I don't know if it's a buy right now. I think it's not near the purple line, so it's not a buy. But if you're looking to hold it for the next 5 years, I mean, as long as the revenues continue like this, which it can, it's going to be a moneymaker. At least that's what would be expected, right? Stock price should reflect the growing revenues. If revenues continue to grow, again, there's so much demand and for their product/service that the revenues just continue to climb by 50 to 60% in this case every year. It's insane how much they're growing their revenues, and you would expect the share price to reflect that. I mean, it was sitting at $10, now it's at 57, so it's reflecting it. That's for sure. Mara stock, Bitcoin miner who's moving into AI infrastructure, I believe. We'll see if they actually follow through though. But in terms of the bottom line, in 2018, 1.56 million. Then it dropped its revenues by 24% to 1.19 million in 2019. And then 2020, its revenues jumped to 4.36 million. So it jumped 267% in terms of revenues. And then a massive 3,552% jump in revenues from 2020 to 2021. A huge jump to 159.16 million in total revenue. Huge jump from 4.36 to 159 million. That's insane. Then it dropped to 117 million. then jumped again to 387 million, then jumped to a record 656 million in total revenues as of 2024. So it seems to have a pattern of red years, like years where their revenues drops, maybe because Bitcoin gets real cheap, I guess. And then I guess in 2024, when Bitcoin was at a high, its revenues tend to be higher, I assume, because of that. They're really just focused on, Bitcoin mining. But they're looking to pivot into AI. So we'll see how that works out. But its revenues from 2018 to 2024 have grown from 1.56 million to 656 million. Imagine being a business owner and you see your company go from only making 1.56 million to 656 million. Well, you're already a millionaire at that point. Not a billionaire, but you're a millionaire for sure as the owner. Again, I think this one long term looking good. At least right now, it's a buy. I think because it's around the purple line. So this one's good. I like this one. In terms of the bottom line, at least, Ionq revenues continue to climb from 2020. 2020 revenues is 0. 2021 revenues for Ionq 2.10 million. Then it jumped to 11.13 million in 2022. In 2023, 22 million. So it's doubling. And then in 2024, it doubled again to 43 million. So this Ionq quantum computing stock continues to double its revenues. So I think this one's another one to keep an eye on for the future. This is a buy, but I think you need to wait for like 30 to 33 because that's where the purple line is. So at least on that bottom line, this is looking good for a long-term hold. Tempest, I don't know what this one is. I think, is this one another healthcare? I think it's AI healthcare, I think, if I recall. I don't know the company that well, but I looked at it. I looked at the bottom line and I'm like, whoa, look at that bottom line. It just keeps going up on those revenues. 2020, 188 million. 2021, 257 million. Then followed by 320 million in 2022, and then 320 million, and it jumped to 531 million in 2023, then 693 million in 2024. Again, we're looking at companies whose revenues just continue to surge. And Tempest AI here, looking good. I think on the charts it's already made its big move. I think it's at the top, I believe. We'll see though. This one could go to 100 plus like Palantir. I believe that. Again, we're looking at stocks whose revenues just continue to climb. So this is another good one. And finally, Soundhound AI. There's probably some I missed, but I just wanted to keep it to 10 stocks, or else this video is going to be like a half an hour long. Soundhound 9.57 is where it's sitting at right now. I think it's under the purple line, so it's at a discount. But in terms of total revenues and the fact that this is in the AI sector, total revenues in 2020 is 0. 2021, 21 million. Then 31 million, 45 million, and then in 2024, 84 million. So there's plenty of demand for their service/product because their revenues, again, continue to climb by like 50% or more every year. And I think they've predicted they're going to make like 200 million by end of this year, so or more. So we're looking at stocks that are mainly in the AI or quantum sector and that have growing revenues by 50% or more, ideally. But as long as it's growing, that's all that matters. Again, some of these safer than others. I would say the top dogs would be Nvidia and Palantir because they got revenues in the billions. But yeah, there's some riskier ones here like Kulr. If it works out with Kulr, that one could go to 10 in the future, 10 plus. I mean, Palantir was at $5 at one point, and now look where it is. So, Kulr looks bad right now at 125, but if it ever goes to 125, people are going to be like, damn, I should have bought 125. That's just how it is, though. But the most important thing is to look at that bottom line. Is there still demand for their service/product? That's always the question. This is why it's important to look at the bottom line. Before I let you go, if we look at GME financials, you guys are going to be like, oh my God, who would invest in that? I think GME, I think that one is, it's a good stock to trade. It's not something you would want to hold long term. That's probably the best way to put it. That's the best way to put it. Let's look at the yearly. Yeah, you can see right here. So if you look at GME revenues in 2018, 8.29 billion. I think it's important to show you something you shouldn't buy because the bottom line just ain't growing. So 8 billion in 2018, right? In total revenue, dropped to 6 billion, dropped to 5 billion, then climbed a little bit to 6 billion, then dropped again to 5 billion, and then stayed at 5 billion in 2023, and then in 2024 their revenues dropped to 3.82 billion, the lowest since 2018. So when you see this, why would you invest in it, right? Like that doesn't make sense. Like wait, their revenues are just going down. It's doing the opposite, right? That doesn't make. That's why JME doesn't really do anything. It just kind of it pumps and then it dumps, but it doesn't. You're never going to see this go to Palantir levels of. It's not going to go to 125. What happened in 2020, 2021 was a one-time thing. Maybe it'll happen again in the future. Absolutely. But that would be like the only time maybe we see Jimmy back to 100 plus. But just in terms of the bottom line, though, if we're going to buy a stock that we believe is going to go to 100, there's stocks with actual revenues that keep growing in the AI sector that they're just safer and better, right, compared to this. And that's why you see the share price. I mean, its revenues are literally going sideways if you think about it. Like it's just stuck in the 5 to 6 billion range, basically, on average, which reflects why GME is stuck, between $20 and $30. It's kind of funny how that works, right? Anyways, that is it for the video. Let me know what you think. I'll see you in the next one.